Welcome back to Ferocious Education. This is Zed. Today I'm going to be talking about Clover Health once more. Make sure to drop a like to this video to help the channel grow, subscribe, and notifications on. I covered this one previously multiple times before. You'll find my previous video in the description below. I did talk about previously regarding their earnings, although I'll cover that again once more today. And I did talk about their SEC investigation going on based on the short seller report, and as well I discussed the short seller report previously. So if you'd like to get to know any about these stuff, you'll find it in my previous videos. But for this one, I'm coming up with an update as well as technical analysis towards that. So let's jump right into this one. So before we jump on towards the technical analysis, first due diligence. So for this one here, we do have a couple of things that I do want to discuss. First off is a lot of misconceptions about the earnings itself. So I need to go ahead and talk about the earnings quickly before moving on. And I'm just going to read here some of the highlights in terms of the CFO itself. They said, our 2020 results demonstrates our ability to deliver revenue from membership growth while improving management of the cost of care of our members and driving further operating leverage. The global pandemic presented with us with a unique challenge through 2020, and our primary focus was on ensuring that our members had access to the testing and resources they needed in the midst of an unprecedented public health crisis. We delivered this access while at the same time building the necessary infrastructure on processing to becoming the public traded company, which becomes official in the January of this year. On a full year basis, the deferral or elimination of certain healthcare services due to COVID-19 had a slight net benefit to the company's net medical care ratio MCR, offsetting testing and other treatment costs that were directly attributed to the pandemic. That benefit was most pronounced during the second and third quarters of the year. During the fourth quarter of the year, that full year benefit was somewhat diminished as a result of higher levels of COVID-specific care and treatment for the company's membership or members, combined with the utilization of services that had been deferred in previous quarters. So if we were to look into quarter 4 2020 compared to 2019, we see that their net loss is still a little bit more significant. So the net loss is around $81.6 million compared to $78.7 million. And for the full year for 2020, you see an improvement there, $91.6 million compared to $364 million. So they're still in net negative, and I did discuss in my previous video. I believe their estimated net positive would be somewhere around 2024, 2025. For more details on that, you'll find it in my previous videos. So they're not net positive yet, but they're still seeing a good amount of improvements in terms of shrinking their net loss. And it comes towards the question of scalability. Perhaps if they were to scale their operations at a higher level, because remember, they're not available in every state, the numbers there could be a lot lower. So again, looking ahead onto 2021 and beyond, they say that they are well positioned to execute their growth strategy as they enter the new Medicare Advantage markets and launch their direct contracting entity. Despite the ongoing uncertainty relating COVID-19 pandemic, we expect to continue to deliver solid revenue growth and continued improvement in the ability of Clover Assist to reduce the overall cost of care for our members. And for the full year of 2021, there's some guidance here that they're looking at. Medicare Advantage membership is expected to be in the range of 68,000 to 70,000 by December 31st, 2021, a growth rate of 17 to 21% as compared to year over year and in 2020. Now, historically, approximately 80% of Clover's sales were direct from in-person sales. Despite the changes in consumer behavior and reduced traffic nationwide due to COVID-19, the company had strong annual enrollment period results. Clover believes that it's a testament of their strength. Moving on. For the Medicare Direct Contracting Program, the company expects to have access up to 200,000 Medicare beneficiaries through its contracts and participating providers, and they're going to update that on a quarterly basis, of course. Total revenues are expected to be in the range of 820 to 850 million, inclusive or of a preliminary estimate of approximately 30 to 50 million of revenue generated in direct contracting. And then we're looking at direct contractings are expected to be in the range of 0.8 to 1.1 billion dollars. And then we're looking next as well at what are we looking at next? There we go, for CMS of 100% net saving there of targeted required by CMS. And in terms of the net loss, it's expected to be in the range of 210 million to 170 million negative. So that's for 2021. So let's say the lower estimate of 170 million. And that 170 million, if you were to take a look at it, you're looking, it's better than the full year 2019 there from 363 million. So you're seeing a good improvement there. but a bit worse. Well, it is worse than the full year 2020. So year over year, they're going to be down in 2021. At least that's what they're forecasting compared to 2020, but still an improvement from 2019. So keep in mind on that, and the reason why I wanted to cover that was just to clear things in the air. Now, in terms of institutional buyers, things have been looking a little bit weird. There's nothing going on this week from my last video, other than Soho Wealth adding 108 shares, so that's a little bit small amount, I guess, at around $1,000. In terms of taking a quick look into insiders, we don't see anything here that is any significance. Now, we did get one new news that is updated new. Clover Health joined forces with Advanced Headline Studio to launch National Magazine for the US seniors. Clover Living, which is a health and well-being magazine designed specifically for people over 60 years of age. So this is one here is supposed to kind of be for their members. It's a trusted and respected partner in their health. Our goal is to provide them, as well as the growing population of Asian Americans, with a magazine that celebrates their life experience with lots of positive advice about living well. As we continue to grow across the country, we expect the new publication to supercharge our outreach, engagement, and from valuable introduction to healthy living for the Medicare population, said Andrew Robinson. So here's the headline studio. It is a little bit of a weirder website in terms of that they still have their WordPress logo. So if someone needs to look into that and fix it up. But anyway, this is their actual headline studios. Looks exciting there. That might be a little bit of an exciting move for Clover Health. But there we go. We covered almost everything that we have new. There's no new events coming up. And we need to go now towards technical analysis to understand a little bit of the perspective and the movements of different traders and investors within. And now towards the technical analysis perspective. On the one-day perspective, we see on the MACD that we're seeing a positive reversal. Just before going on towards that technical analysis, make sure to please drop a like and subscribe with notifications on. It helps my channel a lot. If you'd like to join our Discord to discuss this a bit more, if you have any questions, you can go ahead and follow me. It's in the description below. So on the MACD here, as we did say, we're seeing a positive reversal. The histogram is for the first time positive in a while. That's really bullish. In terms of willing percent R, it's not even overbought yet. It's still within the neutral, which is amazing. Momentum is trying to cross above towards the zero, at least currently it's negative 1.43. And ADX shows that this was actually a very strong negative trend. We're not out of the wood yet, but you see here the bearish trading action zone above the 1048. I think we're going to be there bullish again. In terms of the 2-hour perspective, we see here that moving averages might be not giving us much. Momentum is positive, cool. MACD is kind of stable. William percent R is a bit overbought, and ADX doesn't show us much, but take a look into the moving averages. And the reason is that I'm saying 10 SMA is above the 30 EMA, and you have this thing which is called the trading action zone, where positive reversals are likely. And that's what I want to look at. The positive reversals are likely there, the trading action zone, you're looking at 869 to 845, and that is the range that you can probably expect for it to, if it does dip within that range, to jump back up or bounce back up. Moving averages, it's expected for this one to trade 1053 on the top, 957 in the middle, and 86.1 in the bottom, although this one hasn't really followed that significantly. In terms of stochastic fast and stochastic slower, both are showing that this is in the midst of a trend, and it still hasn't even seen any kind of resistance where it can break that trend. Now, before moving on, speaking about trends, this was the actual downwards channel that I drew before, and I said once it breaks, this one can actually start benefiting out of a really nice move. Now, this move might not be strong for anyone, for a lot of people, but you're looking at almost $9 from 630. And it starts creating this new channel of its own. So let me just put it onto a 1-hour perspective, and that will show you a bit of a better perspective. So we're looking somewhere around this range right here, and you start seeing this channel that is looking really bullish that starts oscillating upwards. So keep in mind, in this channel, currently the top of that is around 961, the middle is 904, and the bottom is 847. So you can tell, and you can update it as you go to understand better where the price action would probably go. In terms of Fibonacci retracements, significant supports here are seen on different levels. Now, there's fewer supports than resistances, of course. The current support right now is 889. It's currently just above there on a 1 day. Of course, in extended hours, that's a different story. In terms of significant resistance, it's 1049, 1177, 1306, 1490, and 1724. And one of the things that I'm talking about here is that it's currently meeting this kind of very critical area that it is either break it or make it. And you get to see that this line here, this is a very significant support slash resistance at 892. It goes 892 to 904. It needs to break that almost $9 and stay above and make that $9 a support. Now the next support below, which seems to be strong, is the 841, which is very, very good for this one. 802 below there. The other support is 763 and a very strong support at the 732. Significant resistances, of course, is the $9 as I talked about. And then we're going up a little bit higher, somewhere around the 997, which is almost the $10, then to 1043, and then we're looking at 1147, looking at 1256, and then 1390, going up to 1442, and then up to around the $16 or 1591. When it comes to the question to Ed, what do you think about this one? Well, for this one here, things are a little bit shaky for me because this company has a lot of valuation. It's not net positive yet, so there's still a lot of speculation and hopes. And I do hope that they do see that net positive as soon as possible, based on their estimation, specifically as well in my last video, where I did show you their own estimation. They're probably looking somewhere around 2024, 2025, where they become net positive. And until then, things become a little bit hazy on their future. So you can start expecting perhaps private placements, cash to be raised, etc. later on. I'm talking about in a framework of 5 years. Short term, if you're trading this one, I do see this one jumping back to $10 sometime soon because of people associating it with at least the pre-price of the SPAC at $10. Now, I'm not saying that you should do that with every SPAC because that's very dangerous, but I do believe in this one in terms of what they're trying to do. They're trying to provide better accessible programs, and I do hope that they do succeed because I do believe in their product. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like. Have a wonderful day.